I'm Adrian Manns, live from the Money Show in Seattle, Washington. I'm here with my friend Amelia Bourdeau of Market Compass LLC, and let's talk trade wars. What do you think's going on in the broader markets pursuant to what's going on with China?
It's very interesting. Thanks for bringing that up. If we just look at the equity market days that the Trump tweets came out about tariffs and trade wars, we saw equities certainly fall on those days. And now with the Mexico kind of respite, he said no tariffs on Mexico. At least that issue is taken off the table. And now we look back towards the China trade war, and we hope to get some sort of resolution at the G20 meeting, possibly June 28th, 29th in Tokyo. So we'll see if that happens. The market's really, really watching that. And we do have a Fed meeting next week. About 24% chance of a 25 basis point rate cut is priced into the Fed funds futures right now. So a lot of analysts, and I am in agreement with them, they don't think the Fed will actually cut rates next week just because they want to see that result from the G20 meeting first, which is a week later. So there is, though, an 86% chance priced into the markets that the Fed will cut 25 basis points in July. And so we'll have to see. But the basic point is that there's a lot of uncertainty heading into this G20 meeting at the end of June, and there's certainly a lot of headline risk around the end of June.
Seems unlikely that we're going to walk out with a deal, right? It's just a step in the direction of a deal.
Yeah, it's true. And I mean, maybe it could actually become worse. So President Xi has not formally agreed to meet President Trump yet at the G20 meeting to discuss the trade talks. And just yesterday, at least as reported by Bloomberg, Donald Trump, the President Trump, threatened tariffs again on China, further tariffs on China if President Xi won't meet with him at the G20. So it's just, maybe we'll walk out of the G20 meeting with no meeting between the two of them and additional tariffs, which would be terrible.
Well, we'll see how he responds to a threat.
I know. Two people can't be pushed around on either side.
I guess.
It's tough. And in terms of market uncertainty, though, this is so binary, and I think that that's the problem. I've been asked about this a lot. I've been asked kind of what you said about like a half solution, and I've been asked also about the binary nature of it. Like, will we get a deal? Yes or no? And that's that causes a spike in volatility anytime you have an outcome that could be so binary. The other outcome that you discuss is kind of like a half deal, and this trade war persists. That's difficult too. So I don't think in that situation we'll see a sharp drawdown in equities, but we will see a slower drawdown in equities because as uncertainty persists, kind of like with anything in life, it just wears you down. It wears the market down.
And it seems like we're trading at a top, right? It seems like it's sort of a short-term market top anyways. What do you think in terms of a possible correction if things don't go well?
I think about the average correction, maybe I'm not sure. I think the average correction in the S&P 500 historically is like a drawdown of 10%. So when you see a drawdown of 10%, it's no real need to panic. That's just the average drawdown. So I would expect that kind of the average drawdown. But of course, if we get no deal and the Fed then cuts rates, that will help actually stem that drawdown in equities. That should help boost equities.
Sure. Great. Thank you, Amelia.
All right. Well, thank you for your time.
All right. For Money Show, I'm Adrian Manns.